morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Chan, you're watching IndianOpen. Let's go straight to the headlines at this hour. The International Monetary Fund says global growth is increasingly getting precarious, but rules out a recession just yet. Crude prices remain near a 4-month high as OPEC reiterates intent to stick to production cuts. Jet Airways lessors ground additional 15 aircrafts, taking the total number of planes in operation to just 20. And Metropolis Healthcare's 1,200 crore initial public offering opens for subscription today. The company allotted shares worth 530 crores to anchor investors on Tuesday. Well, it promises to be an interesting day of trade because quite like what happened in trade yesterday as well, there's a bit of a divergence between what happened in the world markets and what happened and what Asia is showing. Firstly, the global setup. Christine Lagarde, in an interaction earlier, in a speech in New York, said that the growth is losing momentum that we had hoped for pretty much across the world. We have 70% of the economy that is slowing down. Indeed, the global economy is at a delicate moment. So more reiteration about how the world seems to be in a slowdown mode coming in as well. The markets have shrugged off all of these worries thus far across the world, by the way, not just in India, across the world. We've shrugged off these worries thus far. Let's see if we manage to do that consistently in the wake of liquidity coming in. The US markets were not too phased up by this statements, just that they had a relatively muted day in session. The last 2 days have been pretty good. Yesterday, a bit of a green in the screen. The Dow futures for now indicating a start which could be marginally in the green as well. European markets, in fact, had a much better output in trade yesterday. FTSE closed about 1% higher. Lots of news flow around Brexit, maybe some extension of deadlines. Both Theresa May and Corbyn slated to meet up as well to discuss some further terms which could actually help the exit as well in a better situation. The pound reversed. So the FTSE was okay. CAC and DAX marginally in the green as well. And like I said, while US markets were okay, Asia is actually showing a much better picture. Hang Seng up nearly 1%, Nikkei up nearly 1%. So it's a bit of a mixed trend the last few days as to what's happening. Our markets, the SGX Nifty indicating a start which is about 12 odd points in the green. And it takes us ever so more closer to those record highs. What happened in trade yesterday? Sensex, of course, ended at record closing highs for itself. The Nifty ended in the green. And now with the move that happened yesterday, the small move that happened yesterday, it's about 47 odd points away from record highs. Watch out for those levels. 11,760. That's the number that you got to watch out for the Nifty. And frankly, all that everybody's watching out for is that ahead of the rate decision tomorrow, can rate sensitives participate and help spur the Nifty? The Nifty Bank is the pivot, really. If that does well, you anyways have the Nifty doing well. But if autos, which have found a bit of a mojo in the last few days, if they manage to bounce back, or if real estate, not a big weightage on the Nifty, but important from the sentiment perspective, does well, then you probably have a fighting chance of nudging or eclipsing those record highs which were logged back last in August 2018. What also happened, just one last point about yesterday, what also happened was the rupee strengthening quite considerably in the dying moments of trade. So as you can see in the chart, it's an inverted chart, of course. So it shows the currency falling, but essentially look at it from a perspective of the dollar weakening versus the rupee, or the rupee strengthening. So close remarkably smartly, about 45 odd paise in the green, for 45 paise gains for the currency in late trade or in overall trade. So it was quite remarkable. Let's wait and watch what happens to the currency in the session today. But amidst all of this, it's also important to monitor what is it that you should watch out for in terms of stocks that could react. Not too many, unfortunately, in the session today. Maybe some brokerage notes, and we'll talk about them later on. But Marico, they came out with the quarterly updates. The demand conditions, they say, are stable. The offtake growth has been healthy, and they believe that the operating leverage, input costs will all aid margins in the quarterly reported numbers. Brokerages largely have been sanguine. Goldman Sachs and a couple of others have come out with the note as well. But suffice to say, Marico, interesting quarterly update. Won't be surprised if it actually has a day which is marked by some positive reactions. The struggle continues for Jet Airways though. Another 15 planes grounded due to non-payment of dues. As a result of this, the current operational fleet stands at about 20 aircrafts. So the bad news continues. The only thing that keeps Jet Airways stable at between 250 to 275 is this whole agreement that has been reached. And let's see if indeed the lenders find a buyer in due course of time, because that price would have a big bearing on what happens. So do watch out for Jet. There's an IPO that opens today, Metropolis. They have allotted shares worth 530 crores to anchor investors at 877 to 880 rupees per share. We'll of course talk all about this IPO in just moments from now, so I won't dwell too much on it. But for all primary market watchers, watch out. The Embassy REIT's IPO had a fabulous listing, so gains for investors. If Polycab's grey market premiums are to be believed, that will have some good response. So the IPO market is well and truly alive and kicking. Metropolis could be an interesting one. Lastly, if you want to play any kind of pre-election rally, Deutsche Bank has some advice, and I bring that to you. They are betting on large caps. They say that in the backdrop of seasonally soft quarter for economic activity, expected easing in domestic / external monetary policies, and reduced political risk, we would expect the buyers to be in favor of quality, growth, and large caps before the elections. And their picks are Axis Bank, ICICI Bank, Titan, Asian Paints, and Reliance Industries from the large cap pack. So do watch out for these stocks. Maybe, just maybe, some of them could have some activity in today's session as well. Okay, well, that's as far as the trade setup goes. Of course, the IMF Managing Director Christine Lagarde says that the global economy has lost some more momentum since IMF's last downgrade in January. She does not anticipate a recession in the near term, but calls the situation precarious. Bloomberg's Stephen Engel reports.
The IMF just gave its most recent update in January. So these comments from Christine Lagarde in Washington, D.C. speech indicating that the global economy has lost momentum even from January. And keep in mind, in January, that was a downgrade from an earlier downgrade that we got 3 months prior. So potentially we could get another downgrade in global growth outlook coming on April, I believe it is 9th is when, yes, April 9th, a new forecast is coming from the IMF. What Christine Lagarde says, we're in a precarious position right now in the global economy. The IMF in January, as I mentioned, lowered the growth projection to 3.5% for this year, 3.6% in 2020. And now she's indicating that while not in recession, we could be seeing lower numbers going forward in that new outlook. Here's what she had to say.
We do not see a recession in the near term. In fact, we expect some pickup in growth in the second half of 2019 and into 2020. So you see now what I mean by unsettled. And indeed, the global economy is at a delicate moment.
Delicate moment indeed, including the WTO saying they're slashing the global growth outlook on trade to 2.6% for world merchandise trade growth. That would be the lowest level in 3 years.
Well, the central question amongst all of this remains that even though the market knows that the growth is slated to come off, should we wait for pull back in the markets immediately, or will that happen with a bit of a lag? And multiple factors would weigh in out there, principal amongst them liquidity. I'll weigh in on some of those factors, at least for the Indian markets, a bit later on First Word. Speaking of First Word, let's tell you what's lined up on First Word today. We'll start off, of course, with Sumit joining in to take us to the sharpest margin changes expected by analysts in the lead up to the earnings season. This determines in a big way what happens to EPS and profits, so important to monitor. Like I said, Indian equities are scaling new highs almost every single trading session, but it's only making an already overvalued asset class even more expensive. I look at the pricing scenario, and Metropolis IPO opens for subscription today. Darshan tells us what is on offer. Changing regulatory environment, a liquidity crisis, and subdued growth. Corporate India had a fair share of hurdles in the financial year 19, but despite all that, half of the Indian companies are expected to report a margin expansion. Sumit Sarkar is standing by with the biggest margin changes priced in by the markets. Sumit, good morning. By half, do we mean half of the Nifty 50, half of the BSE 200, half of the NSE 500? What is the universe?
So it is 80 of the 163 companies that are tracked by at least 15 analysts, and we are not including the one that is in the BFSI sector. So a total of 163 companies. That's the pool that we have that are tracked by 15 analysts and excluding the one belonging to BFSI sector. And of them, 80 companies are expected to report a margin expansion in FY19 compared to FY18. So if you see among the stocks that are expected to see the highest margin expansion. Now for Coal India, FY19 margins are expected to be the highest in the last 3 years, mainly benefiting from price hikes and the strict cost controls despite the inflationary pressures that the company has seen in FY19. Now if you see in FY18, the company had a one-time non-recurring employee expense due to increasing gratuity ceiling limit, which impacted its margin, and that's the reason you're seeing such a big margin expansion for Coal India. Second on the list is Godrej Properties. Now higher sales both in terms of value and quantity is expected to aid the company's margin. Also due to Ind AS 115 implementation, high margin sales of residential property will aid its margin in FY19. The third on the list is Steel Authority of India Limited, which will see an improvement in its margins on the back of strong steel pricing environment and operating efficiencies led by lower raw material cost, better product mix and a lower employee cost. Also for SAIL, the FY19 EBITDA margins also expected to be the highest in the last 8 years. Fourth on the list is Prestige Estates. Now higher rental income and increasing revenue contribution from high margin inventory is expected to aid the FY19 operating margins for the company. Lastly for Dish TV, its merger completion with Videocon D2H is expected to boost the company's EBITDA margin as it will realize synergy benefits in back-end IT, marketing costs and infrastructure costs. Now among the stocks that will see the highest margin contraction in FY19, Vodafone Idea tops the list. Higher cost and lower revenue because of competition in the telecom market will lead to a drop in the company's margin. Now for FY18, the EBITDA margins are for Idea Cellular, while for FY19, the margin estimates are for the combined Vodafone Idea entity. Now for Engineers India, a change in revenue mix which is expected to lead to lower margins FY19. Now if you see in FY19, the company is expected to see a lower portion of revenue coming in from the high margin consultancy business, and that's the reason we are seeing this drop in the margins for Engineers India in FY19. Third on the list is Bharti Infratel. Now their margins are expected to decline by nearly 710 basis points, and that is because of higher energy cost and tenancy cancellation, which also resulted into lower tower rentals, and this will lead to a lower margin for the company in FY19. Fourth on the list is Shree Cement. Now higher freight cost, higher power and fuel cost due to increase in pet coke prices and higher other expenses because of foreign exchange losses will lead to a lower margins for the company in FY19. Last on the list is Indigo. Margins are expected to be lower for FY19 for Indigo due to weak ticket prices, rupee depreciation and higher fuel cost. Also the FY19 margins of Indigo are expected to be the lowest for the company since FY14.
Wow, that's interesting. Some unexpected names out there. You wouldn't expect Coal India to show such a sharp margin expansion.
But that was because in FY18 they had that one-time expense. But still, it's a good improvement that the company is seeing on the margin because of the price hikes that they had taken for the coal.
Yeah, so that is one. The other thing is aviation, right? At the start of FY19, with the growth numbers trickling in the way they were, nobody would have anticipated this to happen.
Yes, exactly.
And the numbers having petered off, and maybe crude prices also playing sport out here. It's a fairly interesting change year on year for the aviation companies.
Yes, for Indigo. And so Steel Authority of India, that also stood out for me. Highest EBITDA margin expected in the last 8 years because of the cost control that the company has taken and done in FY19. So that was also one of the standouts that was there in this list for me at least. Yeah,
you know, Samit, the interesting part about a Steel Authority of India, for example, is that in July, August, September or thereabouts, when everybody in the whole world turned bullish on the metal companies, SAIL, for example, at 90 rupees, there were analysts coming in about how robust the quarters look like and how the target price may be substantially higher. And woof, it's all just gone down the drain. So the reported numbers might look okay. Somehow the share price isn't quite looking all that great.
Well, yes, actually, but then the outlook is also weak for the company given the fact that now steel prices have come off. So that could be also the reason why the share prices has not bounced back for the company given the fact that the operating margins are still expanding. To last year.
Well, for Samit, thanks. That's a very interesting study, and I can assure you for all of these companies that we've marked which are going to see some margin expansion, the one question that we'll be asking them when they talk to us would be, what is their margin outlook like for FY20? It's great to do well in FY19. Can they do an encore in FY20? I think that's the key thing. Samit, thanks so much for putting this into perspective. That's Samit Sarkar with an analysis of what's happening there on the margin front for some of the companies. 80 out of the 163 companies which have at least 15 analysts covering them. That was the benchmark. Now, speaking of benchmarks, the Indian equity benchmarks are hovering near their record high levels. Sensex has closed at record highs yesterday, and Nifty is poised to cross the hurdle anytime soon. If the SGX Nifty is an indication, we may be very close to that today. At this juncture, let's examine how valuations and fundamentals of the Indian markets are stacked up. So just a bit of a brief study into where India stacks up vis-a-vis other countries and what are the monitorables. So first, India's premium compared to the world markets. Look at this. I've chosen the Nifty 50 for, by the way. So the 12-month forward PE multiples at about 19.5 times. It could vary. Some people will say it's about 18.5. Some people will say it's about 19.5. I've chosen the consensus 19.5 times, 19.53. The 5-year average PE 18.29. So on a 5-year average PE multiples basis, India is already expensive. Now compare that to the others, and you will see that by and large, the other BRIC nations are either trading at a steep discount to India, at times even trading at steep discounts to their 5-year average multiples. South Africa, for example. So, and you might argue that that's not a correct benchmark because South Africa has its share of pains. Having said that, just look at the relative valuations of India versus the other BRIC nations, and you get the picture with that chart, with that table on your screens. Now, what about why is it that India is trading at such a premium, and what has it done to the recent outperformance that India has shown? Well, it's made India on technical basis as well trade in overbought territories compared to a few other markets. So if you look at the RSI indicators or otherwise, you will see that how Indian markets, by virtue of the move that we've seen, are now in the overbought territory. They could well stay in that territory for a while, but the point remains that they are trading at those overbought territories, and therefore that could also be a near-term concern for Indian market watcher. Add to all of this are the growth warning signals. We were talking about how Christine Lagarde spoke about how the world economy is poised for growing lower. Look at the warnings coming in from an Indian watcher's perspective. The core sector growth, the eight core sector growth has slowed to about 2.1% in Feb, was 1.7% in Jan, which was a 19-month low for the Indian markets. Auto sales continue to show that decline on weak demand numbers. Air passenger traffic growth is at 54-month lows in the month of February, 5.6%. So all the high frequency indicators are showing that there is pain as far as India goes. I told you the valuations, I told you the technical moves and how it's looking overbought, and how the growth concerns weighing in on India or the world could also make people question about whether it's wise to pay a premium, and such a premium, to an Indian market or any market when growth worries are looking so evident. In fact, we spoke about this yesterday, that at the Credit Suisse conference, and Neelkan Mishra put out this quote plate as well about his view on Indian markets. But the one line that I'm borrowing from there is that he mentioned that the Indian companies at the conference mostly confirmed a growth slowdown. He was, of course, questioning the valuations as well. But I think the point that is coming out is that managements across brokerage conferences are also talking about how a slowdown seems to be very, very imminent in the quarters to come by. What is working though in India's favor are two or three things. One, the allocation of India in the emerging market and Asia ex-Japan mutual funds are the lowest in 7 years. You would remember a chart that we put out, borrowed from a Goldman Sachs note, which spoke about this. Earnings are slated to come out of a prolonged recession. Now, this has been a belief that people have had now for a number of quarters. This time around even more so. HSBC note that I had read earlier mentioned that they believed that FY20 earning growth could be about 25%. Now that's pretty strong in terms of expectations, but even if we do 20%, that would mean that we qualify as a market that is coming out of an earnings recession. And global brokerages by and large are turning bullish on India. I picked up three that have in the recent past that have come in. There may be one or two more, but the three brokerages and the one line that affirmed their bullishness. Goldman Sachs, they've raised India back to overweight, and they believe there is amidst a catch-up pre-election rally that is possible. This note came out a few days back, but essentially they said this. HSBC mentioned that they asked their investors to learn from history and told people to get ready for a bull run. They, of course, upgraded India to overweight in an earlier note, but this was the big note that came in from HSBC stable on India. Bank Julius Baer too reaffirmed their bullish stance on India as well, turning India to a neutral from an underweight position. So global brokerages are bullish on India. It's showing in the way the flows are coming in, and that is something that you got to keep in mind. But frankly, if you have to monitor what could happen to India going ahead, I think there are 3 or 4 factors that I would believe we should watch out for. One, as I said, earnings growth, and What happens in FY20 is a distant dream, but Q4 will set the trend for earnings growth. And commentary from banks in particular, either delivery or commentary from banks, would be the most important thing to watch out for. Rate action. Economists like Sonal Verma, remember, have already penciled in 2 rate cuts this year. Tomorrow is an all-important credit policy. What the RBI does and what the RBI says would be of extreme importance to what happens to the markets as well. Whether the Australian Bureau of Meteorology has said that there is an approximately 70% chance of El Nino, and if indeed the weather gods play a spoil sport, that might dampen the sentiment quite meaningfully at a time when the Indian markets appear overvalued. And fund flows, while we talk at length about what the FIs have done, I think domestic institutions have sold approximately $2 billion in the month of March. And that's kind of gone unnoticed because FIs have put in money, but that is a point to ponder as well. And why it is so important is that because for all of 2018, we were talking about how even if the FIs are absent, the domestic investor has stayed strong and he will continue to put in money. Look at that chart. This is a chart that I've borrowed from one of the brokerage notes, which shows about how flows into mutual funds have reduced quite significantly in the last 4 or 5 odd months. And if that support, that backbone recedes even further, then that might be a cause for concern as well, because ultimately flows will determine levels. So these are a few key monitorables that I presume we should monitor. Remember, we'll talk about all of this with a very special guest later on. I'll tell you about Rhythm Desai will be joining in. But all of these points will be discussed out there too. But keep these factors in mind when you're looking at the Indian markets. The last piece on First Word today is about an IPO. Diagnostics chain Metropolis Healthcare is headed to the primary markets. The company operates 115 labs and over 11,000 touch points to cater to its patients. But what does it offer an investor? Darshan Mehta is standing by to tell us all about Metropolis and its initial public offering. Darshan, what should investors expect?
Yeah, so first let me just give you the basic of what this company is and what are the IPO details. Basically, if you're looking at the issue size, 1200 to 1204 crores, because that was because of a price band of 877 to 880. So the implied market cap will be almost 4400 crores. This is almost close to 1000 crores higher than Thyrocare, but almost half of the industry leader, Dr. Lal Pathlab. Now, it's an OFS. The entire 1.3 crore shares will be sold by the promoter as well as CA Lotus Investments. The company will not get anything out of this IPO. So the funds that will be used will be only going to the promoters. So that's the scope of the IPO. Now, several other things that we need to watch out as far as this IPO is concerned. Basically, the shareholding pattern. How the shareholding pattern changes. The promoter initially owned almost 68%. That will move down to 53%. And the public shareholding will move from 33% to 45%. The other trend is the financials, and in terms of if you can have the other graphic, what this company is. Now, this will be the third listed diagnostic company in the company, but in terms of revenues, it will be the third one, because there is an unlisted company that is SRL Diagnostic, which is part of Fortis Healthcare. So if you include that revenue, so the largest is Dr. Lal, then comes SRL, then comes Metropolis, and then comes Thyrocare. Predominantly present in Western India and Southern India. They have 5 cities in which majority of their revenues comes in, and they have the ancillary units. But basically, it's present as far as the Western and Indian market is concerned. How have the revenues grown? They're growing at an average of almost 14 to 15% CAGR. From a revenue of 470 crores, they've moved to almost 640 crores in FY18, and in the first one, they've done 599. The other thing is that the margins have actually compressed from a 27% margin and 30% margin. They've moved down to 25% margin, and that's the trend we've seen across diagnostic. But the concern here is that the profit growth is in single digit, while revenues are growing in double digit. Profit growth probably, if you analyze the 89 crores, they'll come in close to 115, 120 crores, which means that the growth will be in a single digit this time around. So that's the financial performance for the company. Debt-free balance sheet, so that's the positive that is there, and the return ratios are strong. On the equity side, capital employed front, and the net worth front, the return ratios seem to be on the decent side.
Okay, so now, what does it mean for investors? How does it stack up vis-a-vis its peers?
Yeah, so basically the other factor, if you're looking at it, let's take a look at the geographic mix between the 4 companies. I'm also including SRL Diagnostic in this. Dr. Lal, basically, if you're looking at it, strong presence in the northern market. So that is where it's present. The advantage that Metropolis has, it has a sizable chunk of growth that coming in both on the western market and southern market, which are growing. Thyrocare has an equal presence, and SRL at this point of time has more presence on the northern markets as well as eastern markets. So they have a sizable portion of revenues coming in from the high growth market. So that's the trend. In terms of revenues and in terms of the margins, if you're looking at it, third largest in terms of revenues, the highest is Dr. Lal, but the margins are, SRL is inferior because of their own reason, but in line with what Dr. Lal does. Thyrocare is higher because they follow a different accounting method in terms of they take the net number. So if you average it out to what it will be, if you take the same standard, Thyrocare will also come in close to 25 to 27%. So margins are in line with the industry average for Metropolis. In terms of valuation, it is not a cheap IPO. Metropolis is at 37 times. Dr. Lal, because of its largest size and scale, has a valuation of 44 times. Metropolis is 37 times. Thyrocare is 30 times because they have been facing a lot of issues of late in terms of their growth, at least over the last few quarters. So Metropolis is no doubt expensive, and that is what brokerages have also pointed out. Sher Khan is saying that, if you want to buy it only for the medium to long term. Even IDBI Capital is saying they keep a positive stance on the public offer, but I think most of them have indicated that valuations are not cheap at this point of time. And Neeraj, if you look at the Haitong report that came out a few days ago, and we spoke to Thyrocare, they clearly pointed out the dealer survey that there is immense pressure that is there on the B2C side of the business. So there is aggressive promotions that's happening pan-India across diagnostic players. Competition has increased so much, and there is immense competition from the unorganized market. So whether everyone, as a fad writes, Metropolis will benefit from the organized, from the shift from the unorganized to the organized market, that somehow is not happening, because still the unorganized market is still having the highest market share as far as this player is concerned. It's a very, very localized. So that pressure will be there on, even if you say that, they will benefit, but that's something that they will still have pressure on.
Yeah, very interesting. One space where you would have thought that organized players will take a stranglehold because it's healthcare. Somehow that's not happening either. Darshan, thanks so much for putting that into perspective. It's sad the fly-by-night operators are still getting patients by the dozens, even though the equipment and the people who might be even conducting these tests would not be qualified. But that's the sorry nature of this business in the country. Anyways, that's all that we have on First Word today. Quick programming note: Morgan Stanley's Rhythm Desai will spell out his investment strategy amidst the soaring market valuations, the sputtering economic growth, and the upcoming general elections in India. Do tune in to that conversation at 9:30 a.m. today. After this break, a full tilt towards the day's trade.
Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Good morning, Neeraj. Interesting start, interesting day, because we could actually make a record high on the Nifty 50 following the Sensex.
Yeah, well, Nifty Bank has done that. The Sensex has done that. About time that the Nifty does that too. The bulls would be hoping for that. But it's also an interesting day, Devina, simply because it's very difficult to predict what the rate sensitives would do, right? The last 2 days, banks have been all over the place. And ahead of the policy, they might still be volatile. And it's arguably the most important indicator for the Nifty to be able to manage to scale those 47 odd points. The Nifty Bank arguably has to participate.
No, it does. Yesterday's session, it stayed quiet, though it ended in the green, but did not contribute much. In fact, while we've been talking about the sentiment being so positive, some indicators is still suggesting that there actually could be a little bit of a concern with this kind of rally that we've seen at such a swift pace. That's the rest of Asia right now. But I quickly want to pull up what's been happening to the Nifty 50 and the India VIX. Now, usually you don't see India VIX and the Nifty 50 moving in tandem. But what has happened over the last 3 weeks is both these have moved in tandem. And in fact, the proportion has only been increasing. If you see the last 3 weeks, that proportion has been increasing, and actually is only second to what happened in 2014. So this indicator suggests that there is a possibility that there is hedging in the system, but overall sentiment still remains positive. Leaving this aside, it's just an indicator that's not been seen too often, and it's happened yet again. So one area to be a little worried about, but overall sentiment still remains positive. We'll see what happens in trade. The markets are happy about the money that's been coming in. 5 billion in March, already 1.3 billion in April in 3 days of trade. So not bad going at this point. We'll talk about all of that and more with our market guests when they join us later. But let's get in a sense of what happened in the derivative space today. Agam Vakil is joining in with more. Agam.
Well, we've certainly seen that spurt come through, but well, it's been subdued movements when it comes to change in open interest. So even as the Nifty is very close to its record high, we aren't seeing as much traction as one might want to when it comes to change in OI. Well, that said, we're still seeing fresh buying coming through, considering a 2.5% increase in open interest for the Nifty futures, as is the case for the Nifty banking futures too. And this is where accumulation is a little higher. This time an increase of 4% nearly. But moving on to your India volatility index, perhaps a matter of a bit of a concern, but this is usually well, typical when markets are at extremely heady levels, that you tend to see the wicks rise as much. And this is also largely on account of an expansion in option premiums, perhaps the call options particularly. In this case, we're starting to see writing around the 12,000 mark. So clearly 12,000 is going to be one very big hurdle to cross over, but we're not talking about 12,000 right now. Let's just talk about the record highs in today's day of trade. For as far as the Nifty is concerned, this is your open interest distribution, max OI with 12,000, and on the lower end, it's around the 11,500 mark, where there's substantial accumulation in open interest. But moving on to your Nifty put call ratio, edging up slightly to around 1.52. And in terms of your other factors, we have Adani Power, IDBI Bank, as well as R Power in the F&O band. And among many other stocks, one stock that stands out yesterday is, of course, NBCC. We'll be watching out for that. There are a lot of shorts building in. Moving on to the next one, we also have Godrej Consumer, and this one is this one is failing to keep up with the markets along with the FMCG pack. This one has also seen shorts. Suzlon Energy, of course, a very volatile counter, but I'm looking at it up more 10%. But perhaps the stock of the day yesterday was Tata Motors. The up move around 8.5%, 24% added in open interest, and we've seen the same for Tata Motors DVR as well. So a lot of momentum starting to build in Tata Motors, so we'll keep an eye on that one as we move into trade today as well.
Thanks Agam for that. A lot of people are keeping an eye out for Tata Motors considering what it has done in the last couple of days. Yeah. You're right. Thanks so much for putting that into perspective. Let's take that question to Pankaj Pandey. He's head of research at ICICI Direct, joins us right now on the show. Pankaj, been a while. Thanks so much for taking the time out and joining us. Can I start off with that? The auto index trading close to 3-year lows the last couple of days. The index has done well despite the numbers not looking all that great. Is it pricing in the worst already? And then a follow-up on Tata Motors. What's happening there?
So, hi, good morning, Neeraj. I think overall auto, if you look at, we have a negative view, and I think this year entirely, if you look at the volume growth has been missing except for certain pockets. Say for example Bajaj Auto, but I think whatever growth they've been delivering has come at the cost of margins. The inventory levels are still quite high on the two-wheeler side, not the same kind of a problem what we see in four-wheeler space. But this particular quarter also we are expecting softer set of numbers given the fact that the commodity prices are still at higher levels. So overall outlook for the sector remains negative for us. Probably June onwards we'll have to see the kind of bump up what we see in volumes, but there are other structural headwinds also for players, so which is why auto remains negative for us. I think specific to Tata Motors, if you look at, I think one has to look at China. In China, if you look at the overall degrowth is in double digits, and even for segments like SUV. So the outlook remains challenging, although the PMI numbers of China had come out as a positive surprise. But I think the overall challenges, especially from the EV side for key markets like China, remain. In addition to that, you have companies or cab aggregators which are impacting demand in key cities in India and globally, or markets like China as well. So given the fact that all these stocks had been sort of beaten down substantially, some bit of a relief bounce cannot be ruled out, and which is what we had seen. But there are a lot more structural headwinds for the entire sector, and which is why I think one should not be really sort of chasing the sector at this point in time.
I think for Tata Motors also, Neeraj, it was the commentary from JLR. They said that Q4 financial results will be positive. They'll be significantly positive with regards to the cash flow. And for JLR to say that, which is the bulk of the contribution for Tata Motors as a whole, I mean, that probably gave it a little bit of a fillip.
Yeah, but it was a reiteration, right, Devina? I mean, they said something like this in the con call as well when the quarter 3 numbers came out.
And after that, obviously, the China PMI data, which
so a combination of factors,
economic activities picking up and things could improve on the China front for Tata Motors. The other pocket, Pankaj, that we'd like to talk about is the entire financial pocket. A key contributor in uplifting the index to levels at which it is right now. Heavyweights like HDFC Bank, HDFC Limited, even Yes Bank for that matter, has come up quite a bit from their lows. Are they looking a bit heady to you?
So if you look at banking as an entire pack, I think that is the most attractive space at this point in time. Whether you look at it from a liquidity perspective. So, for example, last quarter we would see a FI inflow of about 45,000 odd crores. March alone got about 32,000 odd crores. Now, historically, we have seen that banks are looked at as a good proxy for overall economic consumption. And our sense is that historically, whenever the inflows have been good, largely the bulk of the inflows have been towards the banking side. Fundamentally, if you look at what our sense is that the banking as an entire pack will have the highest CAGR in earnings at about 36 odd %. And I think if you look at from even from a quarterly perspective, last quarter we had seen about 122% improvement in the bottom line on aggregate basis. And mind you, it is still not to the normal levels what we had seen earlier. So there is a good scope of growth. Plus, our sense is that with the bigger asset resolution happening, even your gross NPAs are likely to come down by about 130 odd bips compared to last quarter. Probably lower than that because some cases might sort of spill over to next quarter or this particular quarter. But structurally, I think banks are quite well poised for a better growth, even a positive rub-off from NBFC's challenges, I think, is good for banks overall. So I think that remains the best pick, or as a sector, this remains the sector remains the best pick from overall sectoral perspective.
Interesting. Pankaj, after a while, we've seen the sell side turn slightly bearish on Reliance Industries, maybe anticipating weak GRMs and just the overall business momentum not looking all that great. The stock has been on a roll, really, along with the index that's moved to record highs too. What would you advise anybody who asks you about what to do with Reliance?
So largely, we don't have a coverage on Reliance, but what our sense is that, while the GRMs continue to remain soft and probably remain soft for a year, but I think that is not where I think the valuation re-rating of the Reliance is happening. I think largely one has to look at what is it that they are doing on the e-commerce side or on the telecom side. Now, if you compare to that, whether you look at Bharti Airtel or Vodafone Idea, I think Reliance is definitely looking beyond voice and data in terms of offering their services, whereas the other two players, I think, are not really looking beyond that. So from that perspective, the scope or the landscape which Reliance is targeting is far more larger, and which is where I think the value accretion or re-rating is sort of happening. And my sense is that if they are able to sort of raise funds through whether JioFiber or tower assets, I think the balance sheet concerns also will be sort of addressed. So Reliance, relative to other two peers, looks far more attractive from that perspective.
Okay, Pankaj, stay on. So much more to talk about. Let's move to our huddle to try and figure out what are the key stocks that could be in focus today. There's of course an update that is coming in from a company, and typically the last few days corporate updates have met some strong reactions, so we'll watch out for that, and then of course some other stocks in news as well. So Agam and Mishika join in to talk about that. Good morning, both of you. Agam, let's start off with the Q4 update from Marico.
Yes, it's been a positive one, and while they have seen that demand has increased, there's been an uptake, there's stability returning to overall demand, and this commentary is a bit contrary to what we have heard from when it comes to the likes of Dabur and HUL. So I reckon that Marico perhaps can be an exception in this particular quarter. That said, they have also mentioned that while there has been a little bit of sluggishness in wholesales, otherwise, when it comes to their key franchises, which means Parachute Rigids has done very well and in line with their expectations. Perhaps the more critical factor here is the recovery in Saffola that the company is witnessing after a whole handful of quarters of subdued cues coming in from that particular segment. And another concern that also emerges is after many quarters, they are also seeing a little bit of weakness in their value-added hair oil segment. But if you leave all these factors aside, the company is very positive when it comes to the way overall quarter has panned out. And because of that, a lot of broking houses out there have also suggested that there is a more up move for Marico to come, and many of them remain positive. So you have Goldman Sachs as well as something like CLSA, which have remained relatively positive when it comes to Marico on the back of the fourth quarter update.
We'll talk to Pankaj about this, if they have coverage there, and what do they make of these updates. Mishika, what about the other stocks in news?
Yeah, so the first stock we're looking at is Wipro. Wipro's completed the divestment of its Workday and Cornerstone on-demand business to Allright Solutions and has received $95.27 million out of the total cash consideration of $100 million. The divestment is likely to be completed by June of FY 2020, and after the completion of the divestment, the company will receive the remaining amount, which is $4.73 million. Then we have Mindtree. Mindtree says L&T has made a cash offer of 980 rupees per share to acquire 5.13 crore shares, representing around 31% of the stake via an open offer. Jet Airways is in news again. Additional 15 aircraft have been grounded due to non-payment to lessors. HEG will increase its stake in Bhilwara Energy from 29.48% to 49% for 162.05 crore rupees. The acquisition will be completed in FY 2020. Then Biocon will sell and transfer drug substance business to its wholly owned subsidiary Biologics Unit for 33.3 crore rupees. The company says that the transfer of business will help in consolidation of the business. And lastly, we have Rushil Decor. Pollution Control Board has allowed the company to operate its manufacturing facility in Gujarat till July 1st on March 29th. The orders were given by the Pollution Control to completely shut the operations for the said plant.
Okay, we'll watch out for all of these. I must say, Rushil Decor didn't even react too much to that closure notice when it came about in the first place. So let's see if it has a big reaction or no. Mishika, Agam, thanks so much for putting those into perspective. But I want to come to you, Pankaj, with Marico, a Q4 update. What have you made of it?
So Neeraj, I don't have a consolidated or stock-specific view on the stock, but our sense is that post GST implementation and rate cut subsequently, what we had seen that the volume growth for most of the players were high single digits or low double digits. Now our sense is that on that high base, probably you might see a slightly softer volume growth. But our sense is that we will not be taking this as a sort of negative, which is what the primary fear is. So from that perspective, I think the entire FMCG pack, though expensive, I think would continue to sort of keep doing well, probably not outperforming the market, but I think you will still see decent growth coming out from most of these companies.
All right. Getting in our technical experts then right now, Gaurav Bissa of LKP Securities is joining us on the show. Along with him, Chandan Taparia of Motilal Oswal Securities is also here with us. Gentlemen, good morning to the both of you. We're at the cusp of a new record high on the Nifty 50. Some technical parameters suggestive of the fact that there could be a lot of hedging in the system, which is a slight bit of a grey area there. But according to you, what is the upside here on the index, and would you take a long position at these levels? I'll start off with you, Chandan.
Yeah, very good morning. Nifty just tried to surpass its lifetime high, just 20-30 points away from the same. From last two trading sessions, it has been forming dozy kind of formation. But again, declines are being bought in the market. It has been forming the high rise, high lows from last 6 trading session. As previous day low is being respected. So for me, till it holds above 11,650, even for the intraday point of view, I'm expecting it to surpass the recent lifetime high of 11,760 and move towards 11,800 and higher zone. So trend is positive, setup is positive. It has seen some consolidation of last 2 trading sessions. So a small follow-up could lead it to new lifetime high and the fresh leg of short covering activity in the market. So recommending to continue to be with long only strategy with support of 11,650 for an up move towards 11,800 kind of levels.
Gaurav, it's very difficult to take a short call on this and be a contrarian because everybody in the market is of the opinion that the new record high will be taken down.
Good morning. Well, yes, I would term it in a different way for the reason that if you talk to people like we talk to various stakeholders, whether it is our dealers or whether not everybody is gung-ho about the markets, every 50-60 points up move. We do see talks about top formation being done. A couple of days back when we failed to surpass the previous high, there were talks that probably double top formation. So it is not as if everybody is on the board for 11,800 or maybe 12,000 for that matter. But yes, and that is the positive sign that yes, there are some skepticals also in the place, and there are people who are quite robust about a new high being made. So it's a good combination, and I think with the kind of data we have seen, we are seeing a good amount of participation happening in the sectors that were lagging. Something like an auto space that has been laggard for a major part of last couple of months. It has now come out with a full force. So that is again a positive sign. So in my opinion, we may see a 30-40 point dip, even 50 point dip for that matter, but eventually we can head towards the level of 11,850, 11,900. What I would suggest in last couple of days, we have seen that 11,730 has been proven to be an Achilles heel where we are seeing small reversals happening from those levels. Let Nifty surpass those levels, buy about 11,730, keep a 30-40 point stop loss, and on the upside, you can expect 11,800, 11,830 kind of levels coming in a day or two. So for me, it's a buy on a little bit higher levels, let the resistances being crossed, and then one can get on the bandwagon.
You also have a Bank Nifty idea.
Yes, if you look at Bank Nifty, there's a comfortable writing happening in 30,000 put option. We have seen on last couple of occasions, it has been touching levels of 30,000, 180 around those levels and bouncing back quite strongly. Yesterday, it has given a double bottom breakout on hourly charts. One can buy on at the current levels or maybe a 40-50 point dip, keep a stop loss of 100 points on the upside, 30,500, 30,600. The previous high levels can be tested upon. So that can be the strategy. However, I would like to point out that from here on, we will see underperformance from Bank Nifty vis-a-vis the Nifty. So in my opinion, one should be focusing more on Nifty. That is going to see a strong outperformance as compared to Bank Nifty. That does not mean that Bank Nifty will keep on falling. But if you look at the quantum of move in terms of percentage, I think Nifty can outshine in coming days.
Okay, some stock ideas then. And I'll start with Chandan here. Chandan, you got a buy call on an SBI and a TCS, both large caps.
Yes, we believe that now the selective heavyweights counter will do well, and because of that, Nifty could continue that positive momentum to even surpass the new lifetime high territory. We have seen buying interest in most of the PSU bank, and SBI has been making higher tops, higher bottom formation. Even as per the heat map and the cyclical analysis, most of the PSU bank do well in the month of April. And already we have seen the build-up of long position with positive rollover from March to April series. And it has managed to surpass hurdle of 320 and now establishing well near to 330 levels. However, we have seen some OI concentration near to the 330 strike, but a small hold here can take the short covering activity on higher zone. So recommending to buy on SBI with a stop loss of 322 and expecting it to move towards 342 kind of level. Second trade, that is on TCS. The stock has recently bottomed out with the support near to 1950 zone. It has given a breakout from a symmetrical triangle pattern. It has surpassed its falling supply trend line, managed to respect its 50-day exponential moving average. Longs are added with put writing activity. So entire price setup suggests the up move cannot be ruled out towards 2150 kind of level. One can buy the stock with a stop loss of 2045.
Okay. And Gaurav Bissa, you've got a Tata Chemicals, Sun TV, SAIL, quite a long list there.
Yeah, two of the names can be bought at the current price. We have seen strong positions getting built in Sun TV. 640 call option also had a very good concentration. It's closed around that level only. On daily charts, you have seen the inverse head and shoulder breakout happening in Sun TV. And with the kind of move that we have seen, the volume participation from levels of 600 to around 640, it has been quite interesting. It can see a move of 10% also. But for a couple of trading sessions, one can keep a stop of 637, keep a target of 665 in mind. Tata Chemical, a long phase of consolidation. We are not seeing very aggressive positions getting built. However, it's on the verge of a good breakout. It saw a strong correction happening. If it manages to trade above levels of 600, a quick move towards 625, 630 cannot be ruled out. Only and keep a stop loss of 5 days and buy Tata Chem futures. Sale would be a conditional buy. I would not recommend buying here. I would recommend buying above levels of 57, 57.5. There will be a strong breakout, inverse head and shoulder breakout, a very beautiful pattern from the lower levels. It can test levels of 65, 68. For conservative targets of 63.5, one can keep a stop loss of 55. Buy above 57.5.
The two interesting odd names from the index yesterday were Tata Motors and Z at opposite ends of the spectrum. Tata Motors did really well, and we spoke about that fundamentally. We'll talk about that technically too. But right now I want to talk about Z, simply because it's now had 2 days of a pullback while the markets have stayed steady. In yesterday's session 2 ended 3% lower. Day before yesterday's session 3% lower. Trading at about 417. The last 3 days haven't been the strongest. Chandan, Taparia, for somebody who has an existing long position in Z, would it be advisable to take whatever bets are off the table? What are the targets that you envisage for Z Entertainment?
Yes, the stock has been not performing with the market movement. From last 5 weeks, it is continuously making lower top, lower bottom. It also negated the positive formation of previous month and started to decline. It also slipped below its 50-day exponential moving average, and especially when market is heading to new high territory and stock has not been performing, which clearly indicates that some relative underperformance in the counter. So my suggestion is those who are holding long position, if it goes below 400, better to exit the position, because below 400, even the fresh leg of selling can be seen, which may take it to 385, 380 zone. While on upside, if it manages to negate the formation of lower highs, lower lows by surpassing above 440, then only I can understand the change of the negative trend. So as of now, those who are holding the position, put the trail stop loss of 400, or else let it go beyond 444, then the trend will change for the counter.
Pankaj, Pandey, do you have coverage on Z Entertainment?
So on Z, we have a coverage. I think our view is that probably we do not expect much of a performance from the stock, because I think there are certain questions in terms of what kind of stake sale can happen and at what prices. Similarly, I think there are challenges on the advertising side, given the fact that you're migrating customers to the new regime, and which is where the challenge could come in terms of certain pockets or certain segments like advertisement growth not sort of happening. Plus, you have entry of new players on the OTT side, and these are bigger players with bigger cash to sort of back the content. So there is a differentiation of content which is also sort of going on. So till the time you don't get a clarity on who would be the strategic investor, I don't expect a price performance from the stock.
All right, Infosys, the big boy, and HCL Tech too, they both report their Q4 numbers on the 12th of April. IT pack once again going to stay in focus. Over the last 1 month, slightly more muted performance, but not bad, in the green, about 3.5 to 4.5% for both of these names. IT is a pocket, now once again comes in focus because of the strength in the currency and what the implications of that will be. But most of the time, they're pretty well hedged. So the volatility in the currency may not have that big an impact on, the financials as they report them in Q4. But a quick view from you, Pankaj, as we kickstart Q4, particularly for the IT pack?
So, like I said, we still don't have a consolidated view, but I think if you look at one of their key engines, which is the digital portfolio, I think given the kind of commentary which Accenture has given, I think the outlook for at least one of their key engines looks quite bright. Again, since we are heading into result season, the action is expected to be stock specific, but within the tier 1 names, we like Infosys, wherein we expect that the company will do a good amount of catch up in terms of valuation relative to TCS. And besides that, Wipro is what we like, wherein we had seen in last quarter a good margin expansion. I think if they're able to deliver the volume growth, I think these are the two stocks which, according to us, should do well.
Okay. And speaking of IT, I just want to quickly get in a chart check going on Cyient after yesterday's big plummet of about 11% deferment of some big orders there. Possible dip in revenues for Cyient in Q4, and that's what kept the stock on the edge. Chandan, Cyient at 580 now.
Yeah, this stock has seen a sharp selling pressure in last 3 to 4 weeks. Even after the recovery in most of the other IT counter, this stock has not been performing, and the trend is weak if the weekly and the monthly duration is concerned. So I think weakness could continue. It has slipped below its 50-day exponential moving average, broken out all immediate support, and I think there is potential to even going to us 565 to 550 levels on the downside.
Watch out for Cyient as well. 11% down. The management was sanguine about what FY20 could do in the conversation that they had with us yesterday. But the market clearly not liking what will happen in Q4. Right now, the market is focused on immediacy. Really, what happens in FY20 is a distant dream. Divergent moves. Gaurav, Bissa on the two telcos. Both of them very trader friendly. Bharti Airtel versus Vodafone. What is there a strategy that you can initiate on either of these?
We can initiate a strategy on Bharti Airtel. I would give it some more time to Vodafone Idea after the corporate action. It needs to be given some time before finding its own trend. For Bharti Airtel, 350, 352 was the immediate hurdle. As long as trading above these levels, it can test levels of 365, 370. If that is sustained, then a bigger breakout would also be in the picture. So these would be the crucial levels we had recommended to our clients as well. But I would not be pitching it very aggressively. But yes, one can keep a stop loss of 350 by the current levels on the upside. 365, 370 is what I would be looking out for. So that is a strategy. But for Vodafone Idea, give it some more time.
Okay. I think the other one, Neeraj, is Godrej Properties. Yesterday, the big move that came in, 9% higher, and the stock is actually, the days prior to that, you actually saw a little bit of, a tug of war between bulls and bears, because the immediate day before yesterday, it actually closed towards the lows of the day, which indicated that, there were some concerns, uncertainty within the trading day itself. But then, obviously, the fact that they had record, quarterly sales really spurred sentiment and pushed the stock up about 9.5% towards the end of the trading session. Chandan, Taparia at 894. I think 920 is the live high for Godrej Properties. Do you think it can scale that?
Yeah, it can easily scale the same because already it has given a consolidation breakout given the recent highest daily close. And I think even it has given the highest daily close from the day of 11th May when it made the high near to 920 kind of level. So almost highest daily close clearly indicates that the stock is all set to even surpass 920 and a room towards 945, 950 zone. We have seen significant jump in the trading volume, that is more than 34 lakh shares in the stock. So significant jump in the volumes and the open interest activity, consolidation breakout, also a pattern breakout from pole and flag and heading towards the new lifetime entry all suggests that positive momentum cannot be ruled out. So looking for 920, 945 kind of level in the counter, and traders can continue to be with support of 865 and the stock for taking the long positions.
It'll also be interesting to see what happens to OMCs or select other rupee sensitives in the session by virtue of the strong move that the currency had. Very sharp last 40-45 minutes of gains that came in for the rupee. 45 paise, I reckon, is the quantum of gain. So very interesting to see what happens to some of those sensitives in the session today as well on open itself.
Yeah, we kept talking about pharma when the rupee started to depreciate earlier on from its August levels, and how it would benefit some of these pharma manufacturers. Probably the reverse of that happening now for IT and pharma. Maybe not so much so for IT, but probably for pharma. 16 seconds left to go for market pre-open. Quickly looking at what the SGX Nifty is doing right now, which is not a whole lot much. It's actually just about flat, 2 odd points under. 11,785 on the SGX Nifty. The rest of Asia, though, is still trading slightly better. So you've got Japan trading up as well. But that's the pre-open on your screens. Nifty opens under 1/3% or so, but first few ticks, very volatile, wouldn't go by it. Sensex up about 0.5% right now. Taking a look at what's been happening on individual stocks as well, that should come up on your screens. For the Nifty 50, your big movers of yesterday, whether or not they make the list in today's session. We'll start off with India Bulls Housing. That's up 2%. Tata Motors features in the top 2, so that's up 1.5%. Power Grid is up 1%. Eicher Motors 1%. M&M, ONGC, Bajaj Auto. So Auto as a pack has had a good recovery actually. Hero MotoCorp is also up about 0.6%. Titan moves up. Yes Bank at 282 now in pre-open. TCS at almost 2100. HPCL is not, I'm sorry, BPCL, that's up about 0.5%. Bharti Airtel, that's up about 0.5%. The big moves yesterday, 5% higher. Today's session, slightly more muted, but 0.5% higher. Britannia is down. It was low in yesterday's session and is lower today as well. And Reliance Industries, slightly negative. Not a very big change, but yes, there is some more strength. I think 10 paise on the currency. Yesterday's close, I think, is 68.74. We're currently at 68.63.
Quite a bit of a pullback in the rupee for sure. The bond yield should come up on your screen as well. Briefly ahead of the policy, 7.27. So that's quite a bit of a drop in the bond yields as well. There's some buying that happened in the bond markets too in trade yesterday. I think a couple of experts spoke about it as well in terms of quotes on the site. Just a couple of stocks that I want to mark. Jet Airways, and very volatile, so can't really base the pre-open rates as an indication of what will happen. But more planes grounded. The stock might open lower for now, showing a 5.5% downtick. So watch out for that one. Watch out for Godrej Properties, watch out for Cyient, the top 2 movers in trade yesterday, and let's see what they do in the session today. 900 possibly for Godrej Properties. Is there some more downside for Cyient today? Well, no, not quite. The pre-open rate seemed to suggest otherwise. And last but not the least, a small stock, rather not a small stock really, a mid-size FMCG name, Marico. Q4 updates coming in, citing some positivity, margin expansion. The street might like it. Let's wait and watch. 4% higher for Marico in the first ticks. Let's see if these rates settle down. Before we talk more about these, let's get in Samit Sarkar, who joins in with the top brokerage calls for the morning. Samit.
On the big brokerage calls for the day, first we have is on Reliance Industries, where Motilal Oswal has downgraded the stock to neutral from buy, but has hiked the target price to 1457 from 1426 now. The brokerage has downgraded the counter to neutral due to limited upside post the recent rally that we have seen in the share prices of Reliance Industries. Now it also expects the core energy business of Reliance Industries to face headwinds in 2019. Now for the refining business, it expects the margins to remain under stress in 2019, while for the petrochemical business, the margins are expected to be lower due to capacity expansion announced in the US and China. Now for the retail business, it expects the growth to come at lower margins for the company, and for Jio, it is expecting a slowdown in its growth due to lower subscriber additions, and that's the reason it has downgraded the counter to neutral. The second note we have is on Indian IT, where HSBC says that the growth in bank spendings could be patchy going forward with uncertain macro environment in the US. It also expects clients to defer their spending on long-term projects. Now along with this, the margin worries are also at peak for Indian IT companies, with onshore wage pressures compounding. Lastly, an appreciating Indian rupee is another key risk for the Indian IT companies that they would see in 2019, says the brokerage. Now, on the back of this, for TCS, they have maintained their hold rating but has cut down the target price to 1900 rupees from 2060 rupees, while for Infosys, they have downgraded the stock to hold from buy and has cut the target price to 780 from 860. Now, it also says that Infosys is best positioned to grow in 2019 but is still not immune to this macro shocks, and that's the reason they have downgraded the rating for Infosys to hold from a buy.
Okay. Interesting. Samit, thanks so much for putting that into perspective. Let's see. It's difficult to figure out what the IT names would do in the near term. I think a lot would depend on April 12th when TCS and Infosys do come out with the numbers. So that is something that we'll watch out for. Last question to you, Pankaj Pandey, before we let you go. By the way, Marico is the top gainer. But Pankaj, if you had to bet on one stock ahead of the earnings season, which is that stock?
So we would like both Somani Ceramics and Kajaria Ceramics, largely because we have seen a good amount of decline in the gas prices and a benefit of, last year if you look at all these companies got impacted because of higher gas prices, had an impact on margins. But both the companies are looking to deliver low double-digit kind of a volume growth. We expect a margin expansion for both the players. And plus, I think if the Morbi players have to sort of look at price hike of about 10-15% because of the recent shift towards gas from coal gasifiers, I think structurally these two stocks should do well. We have seen a bit of a bounce, but we would expect bounced or the sort of uptrend to sort of sustain for the next 2-3 quarters.
Okay. Pankaj, Pandey, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts.
Thank you so much.
The pre-open rates seem to suggest that we'll have a flattish start. The SGX Nifty at the end of 5 minutes is very, very flat. So we might have a start. Nifty 50, excuse me, is very, very flat. So we might have a start which is at about 11,732, which is about 30 odd points away from those record highs. So let's see if we hit them during the course of the next half an hour. Good time then, and a good day to get in. Gautam Trivedi is managing partner at Nepean Capital, joins us right now on the show. Gautam, good having you. Thanks much for taking the time out. This is Neeraj here. Good morning. First time we are interacting, so welcome on the platform.
Good morning, Neeraj.
Yeah,
sure. Thank you.
And how's it looking, Gautam? I mean, what have you been doing since the last 3 or 3.5 weeks when the mood has changed? Have you been fully deployed for the money that you would be managing of your clients? And what's the stance now that the valuations look so heady?
You know, you bring up a fair point on valuations. At 18.5 times 1 year forward, the Nifty is now the most expensive market in Asia. And let's not forget, we're still only the third best performing market in Asia after the Shanghai Composite and the HSI, Hong Kong, the Hang Seng Index. Not including, of course, Australia and this, which also has done very well. But I guess my point really is that we are very expensive from an Asian regional standpoint. I was in fact in Asia on a business trip 2 weeks ago, and a lot of the fund managers that I met who are active FII investors in India are now starting to find India expensive. I think at this point, at this valuation, the market has more than factored in a potential NDA/BJP win. So as a result, if they were to come in at, let's say, 260 or 270 seats, I don't think the market would necessarily have a major reaction to that. Of course, if the converse were to happen, as in the Mahagathbandhan, a potentially fragile coalition were to come in, that would have a significant negative impact on the market.
Am I reading you correctly, Gautam? Are you saying that for now, the risk reward is not in favor of placing large bets on the long side?
The answer is yes. And again, I don't want to get stock specific or sector specific, but for the broader market as a whole, that is indeed the case. Because if you look at the ground realities, the economy is indeed struggling. You've had a 9th successive month of weak auto sales. Core imports, 4th month in a row are weak. I mean, I don't want to go on, but the fact is the economic indicators on the ground, earnings growth, etc., are not exactly great. The fact is, would you still be buying and going long the Nifty at this point? I'd be skeptical. I'd be concerned if people were still wanting to go long. And at the same time, of course, you've got domestic flows that have slowed down. I haven't seen the March numbers yet, but clearly there's been a significant slowdown in domestic retail flows into mutual funds in the past about 5 to 6 months.
All right, Gautam, good morning to you. So, all the points well taken. So we're at heady valuations, and like you said, there are some issues with regards to growth as well on ground. So what exactly is it that's attracting the foreigners to come and invest the kind of money that they have been investing over the last 1 month? $5 billion in March, 3 days in April, already $1.3 billion in the equity markets.
Yeah, a good question. The fact is, let's not forget, this is not a India-centric rally. This is an emerging market rally. So that's why I said we're only the third best performing market in Asia. You've seen the Shanghai Composite, the Australian market, the Hang Seng Index, and other markets across Asia and other emerging markets actually have done very well. Brazil's hitting a new lifetime high, as is India. But I mean, so we're not alone in this. So foreign money coming into India is a function of money being deployed across EMs and not specific to India.
All right. What's the call now? We've got the RBI policy that takes place tomorrow. Expectations are that we could actually see another rate cut coming about.
Yeah.
Is that something that you're factoring into?
We're not factoring in right now. I think it'll be a little optimistic to expect the RBI to act so fast. If it does happen, it'll be great and good news. I think a lot of that is also, by the way, baked in into the current rally. So if it does come, I don't think the market is going to have necessarily a surprise reaction to that. But if it does come, it'll be a positive.
Okay, Gautam, stay on. So much more to talk about. Just minutes away from market open. It's time for telling our viewers all that they need to know to stay ahead in trade today. First up, Wipro has completed divestment of its Workday and Cornerstone on-demand business. It's received $95.3 million out of the total cash consideration of $100 million.
Marico, in its fourth quarter update, has indicated a stable demand scenario. It sees steady business from the parachute hair oil business. Saffola will also see a recovery, but value-added hair oils have seen a weak quarter.
Trouble continues for Jet Airways as additional 15 planes have been grounded due to non-payment of dues to lessors.
HEG to increase its stake in Bilvara Energy to 49% from 29.5% for 162 crore rupees. The acquisition will be completed in the financial year 2020.
And in key bulk deals, Fidelity Investments has acquired 2% stake in SH Kelkar for 151 rupees per share.
And in big brokerage calls, Motilal Oswal has downgraded Reliance Industries to neutral from a buy, hikes target to 1457 rupees per share from 1426, citing limited upside from current levels.
Okay, so just a couple of minutes left for the markets to kickstart trade. We'll continue a conversation with Gautam immediately post-market open. But since pre-open rates have settled, a couple of mid-sized names which are active, would want our technical experts' view on those. Gaurav, Bissa, word on Marico, looks like starting off 4% higher. There is fundamental tailwind, by the way. The quarter over update is pretty strong. So that's why this uptick in the pre-open session. Can it do more?
But if you look at Marico, the performance in the last few trading sessions, yes, it has given a decent move. If it manages to hold the current levels of 345, 360, then yes, that can be a good breakout, sort of double bottom breakout. The participation not very aggressive in terms of futures build up, but yes, it can then head towards the level of 370, 372. So for me, yes, if it manages to hold about 355, one can buy and pray for further up move targets of 370.
Chandan, is a trade in Jet Airways fraught with risk? Looks like starting off 3.5% lower.
I think let it stable at lower zone, because from last 4 trading session it got stuck in a range and some sort of selling is visible in the counter. Couple of days back it has managed to surpass multiple hurdle of 250. So I think let it test near to 250, and if it turns from the same, then only I'll go with the contra trade, else I'll avoid and wait for some other momentum in this stock.
Gaurav, Bissa, 2 stocks, Yes Bank at 283 now. Does it have the potential to scale 300? And the other one being your Hero MotoCorp was at its 52-week lows a few days ago, has picked up from there. Is anything changing?
For Hero Motor, I would be more interested because this is something that we have advised to our clients on a positional basis, not for next 2 or 3 days. It has seen a good formation. We call it as a harmonic pattern, a bullish side for harmonic pattern. Then again, it would not be 1 day or 1 week trade. One can buy with a stop loss of 2400, 2450 on the upside. One can expect 2850, 2900 kind of levels coming in the name. That would take some weeks, but eventually I think it can give, or it can mimic the kind of move that we have seen either in Tata Motors or we have seen in Maruti. We saw a lull period happening in the name, and then once it started the momentum, then the rest is history. That kind of move can be expected in Hero Motors. For Yes Bank, it has already seen a move. But yes, it can go towards 300. There's a good chance of that. I would recommend playing with the 300 call option buy on the safer side. One, there's a policy ahead that will influence the banking names. And second, it's already moved up a bit. So for me, 300 call option for next 3 or 4 days, that would make more sense.
Okay, got that. Less than a minute left to go for market opening. Quick top calls from both our technical experts. Chandan, Taparia, let's start off with you.
Yeah, I'll continue to be with our recommendation of SBI and TCS. And if someone wants to be comparative better, then we'll go with the TCS support at 2045, looking for 2135, 2150 upside targets.
Gaurav, Bissa?
For me, it would be Sun TV, the kind of positions that you've seen getting built, the kind of breakout. That would be my recommendation today. 665 targets and 637 stop loss.
Okay, Gaurav as well as Chandan, gentlemen, thanks so much for joining in today and giving us your perspectives. Really appreciate your time. About 10 seconds for the markets to kickstart trade. We'll have a start in the green. The question is, can we scale those record highs for the Nifty? That's the big question. Sensex and the Bank Nifty have already done that, remember. Here are the first rates. obviously not on open, but 11,738, so about 20-25 points away from all-time highs, but a muted start nevertheless, 0.25% or slightly less than that. 100 points for the Sensex. The Nifty Bank is participating, that is a key, and for now the Nifty Bank up about 0.5%. The move started somewhere in late trade yesterday when the Nifty Bank scaled up from its losses. For now looking strong. Let's see for how long does this last. The mid caps and the small caps, and let's see how they've started off. 75 odd points in the green. The BSE small cap index about 0.33%. So ho-hum start, but not bad, marginally in the green, which is always welcome. The Nifty Bank is strengthening, by the way. Keep this at the back of your mind. Here's how the heat map is looking. A lot of green, very little red. Eicher Motors amongst the key losers, and after gaining yesterday, by the way, and IT's corrected a little bit. I don't know if it's courtesy the rupee strengthening or otherwise, so maybe trading moves, but IT looks slightly soft. Infosys the top loser. What's gain? Metal names continue to rise and shine. Vedanta, Tata Steel amongst the gainers. Select banking names or select financial names. So Indiabulls Housing, Yes Bank, ICICI Bank, State Bank of India are in the green. But a lot of stocks doing their bit in the session for the markets to be where they are right now. But no big takeaways, at least in the large cap space. Yes Bank top gainer, and Infosys the top loser. Just a couple of quick trend makers before I hand it over to Devina for what's happening at the broader end of the spectrum. Firstly, the stocks that were the buzzwords of trade yesterday: Godrej Properties, Lakshmi Vilas Bank, and Tata Motors DVR. Godrej Properties takes a breather. That may change. For now, takes a breather. LVB, after 3 strong days or maybe more, definitely takes a breather. And then Tata Motors DVR, along with the big boy, continues to rise. So 2 days of strong gains, and it's building up from where it left off. We just want to mark one stock, and that is Jet Airways, wherein more planes have been grounded, 3.5%, 265 and counting. Devina, what are you spotting?
Well, I'm spotting the Nifty right now, but I'll go through the other stocks as well. 8 odd points away, 10 odd points away from its record high, but that's the Nifty mid-cap index for you, about 0.5% higher. Varun Beverages up 4.5%. You've got JM Financial. The stock's been doing well over the last few days, and today as well, no different. The stock's moved up 2.5%. Marico is the big move today in the session on their Q4 update. You've got Trent 372. Suzlon Energy moves up. A smaller name, has been pretty volatile of late, and is up about 2% in the session this morning. Ambuja Cement, then you've got a Nalco, which is up 1.7%. The open is positive. The breadth is definitely more positive. Muthoot Finance 1.5%. Syndicate Bank 1.5%. Andhra Bank, all of them have done really well at open. IGL 1.5% at 304. Then you've got an Eros International, and a Scient takes a breather from yesterday's losses, I guess, is up about 1.5% too. So picking up from those lows, Group Finance 2 up, and Tata Motors DVR 1% higher after following what Tata Motors itself is doing. That's the gainers. Losers, Arcom 4% under, Jet Airways another 3.5%. Godrej Properties, like you highlighted, takes some profit off the table for that counter. HPCL down 0.75%. Sun TV is down in the session about 0.75% as well, and Mindtree from the mid-cap IT pack looking weak, about 0.5%. 767 stocks advanced, 295 stocks in the red this morning.
Well, back to our conversation with our special guest, Gautam Trivedi, is still with us. Gautam, we're stone's throw away from all-time highs, so that may just well happen in the next few minutes, 11,750. Now, the cornerstone of the rally in the last few days has been banks. My question is, for an economy that is going from wherever we are, 2.3, 2.4, 2.6, to about 5 trillion in whatever number of years, banks have to perform for that to happen. However, at about 4 or 5 times price to book for HDFC, 9 times, 9.5 times price to book for a Bajaj Finance, even top quality is coming at extremely premium valuations.
I think you make a fair point regarding valuation, and I think the fact is it's like buying a home in Malabar Hill in Mumbai. The rates are what they are. If you see the outskirts of Mumbai, if you look at outskirts of the NCR, prices have corrected 30 to 40% depending on where you are. But Malabar Hill still commands a premium. So I think there will always be a premium for quality names like an HDFC. And I mean, HDFC Bank has been at 4 to 4.5 times for the last almost 15 to 20 years that I've been following the stock. So frankly, quality will come at a premium, and I don't think there's much you can do about it.
Yeah, but the point is, I mean, So you've seen many such cycles wherein, I mean, a lot of people talk about how every year you find HDFC Bank expensive only to see it deliver about 15%, if not the next year, then on a CAGR basis in the next 2 or 3 years as well. The question is, can somebody put fresh money to work in these names? They may remain expensive. I'm not debating that. Are they good money-making opportunities even right now at these premia?
I think the answer is yes, because it still has the best balance sheet among the banks, period, including PSUs, I mean, undoubtedly. But fact is, will this command a premium over the others? The answer is yes. Kotak's not that far behind. It's very expensive as well, but it's a great bank. It's delivered returns, and people have made tons of money out of Kotak. So, I mean, giving an example here, but the fact is that will expensive stocks remain expensive? For the most part, the answer is yes. Again, it's very important, and again, I'm taking out banking for a minute, but it's very important to understand which part of the cycle that the stock really is. So, for example, Bharti, until 5 years ago, was a 20-30 bagger, but Bharti Airtel over the last 5 years has done nothing for investors. So it really, it depends on where you catch the cycle. But specific to your question on the banking sector and the fact that India will, I guess in 5 years or 3 years, become a $5 trillion economy, the banking sector will play an important role, and HDFC will be leading that growth. So I'd still put my money on HDFC. We don't invest in large caps, but if we did, I would certainly buy it.
So with this big scope for the banking industry as a whole, where do PSU banks fall into place in that equation? Yesterday's big development of the Supreme Court quashing RBI's Feb 12 circular. For PSU banks, it's a step back now. How would you play this?
Yeah. See, my view, and I have a pretty strong view on PSUs and in particular PSU banks. My view is that, unfortunately, every 4 to 5 years, they need a bailout and a recapitalization. The fundamental process and method in which PSUs and PSU banks in particular work hasn't really changed. How do you change that? And that's not going to happen until you privatize them. So as a result, PSU banks historically, if you look at it over the last 20 years, have been pretty much range bound. And I'm talking ex-SBI. Let's keep SBI out of it because it's the best of the lot of the PSUs. But if you look at all the others, they typically trade in a band of 0.3 to 0.4 times book to as high as 0.8. Sometimes some of them even get to one time book. But the fact of the matter is, these are trading opportunities with these stocks. I do not see them as a core holding, and merging 3 PSUs and doing more M&A within that sector, will it unlock value? Will it improve their efficiency? I doubt it, unfortunately. So as a result, I'd stay away from PSU banks. There would be a trading opportunity. So if you're a trader, there could be an opportunity to actually make some good money in the short term. But for a long-only fund like ours, and we do only mid and small caps, and a lot of those PSUs, ex-SBI, do fall in that category. We basically have taken a call not to invest in PSU banks.
What would you make? Would you believe that the NBFC revival, could probably see more investor interest coming back into the space? Obviously, we're not talking about those heady growth numbers of 22% from the NBFC space, getting it down mostly to about 13, 14, 15%. But even with that number, is it worth investing in?
I think the NBFC ALM mismatch was well known, but ignored for the most part by investors. When it finally hit the fan and people realized that this was a lingering issue, significantly impacting the earnings, significantly impacting the working of the NBFCs, people took a huge step back. I mean, nobody had seen Bajaj Finserv fall as much as it did. But having said that, do the NBFCs have a role to play in the Indian economy and the growth of the Indian economy? The answer is absolutely yes. Are the banks competition? Frankly, for the most part, I don't think so as yet. At some point, the banks may actually start getting serious and get into the space that the NBFCs are currently in. But the fact is, I think NBFCs are required for this country to grow. And more importantly, you still have quality names. Again, getting back to what you said about Bajaj, very expensive, but there's been flight to quality. within the NBFC space. Investor appetite and interest, I think, will gradually start coming back, but it's still not there as yet for NBFCs.
Gautam, opportune time maybe to be parked in the space where you are investing your clients' money in. The question is, and my last question to you, do you reckon that the outperformance or any kind of outperformance from the mid caps and the small caps will happen with a bit of a lag, or do you reckon that the next 12 months, point to point, from April 1st to March 31st, FY20, you will see mid caps and small caps outperforming large caps by a margin?
You know, if I look at the CNX mid cap index or any of the BSE mid cap index, if the market, again, a lot is going to depend on who comes into power, but let's assume for a minute the NDA comes in for another five-year term, I think the mid caps will certainly outperform. Having said that, there are certain mid cap stocks and sectors where I think there is serious pain coming. And we've looked at things like kitchen appliances, for example. The competition is just going bananas. We've seen the semi-urban / rural retail business, where companies like V-Mart have done a fantastic job. There are 15 new competitors coming into that space with names that are so similar that you can't tell one from the other. In fact, I've been to the websites of some of these companies. You can't tell one website from another. So where in a town like, let's say, Faridabad or anyway, any smaller town in UP, for example, Faizabad as an example, where there is a V-Mart. Today, the local resident has an option of another 4 similar sounding, similar look and feel stores and companies that are now invading this space. So I think there are issues. The other place where I see a problem also is the building material space, i.e. ceramic tiles, sanitary ware, where you're seeing more competition coming. People who are doing only sanitary ware are now getting into ceramics and vice versa. So I think competition is significantly intensifying. So I think that is something which I'm concerned about, and how will margins sustain. The other sector, before I end this answer, is the hospital space. I think 2 years ago you saw what the government of India did with respect to the price of stents, capped it at 30,000 rupees, which is down 85% from what they used to be. If I think the Modi government comes back, they will continue as part of their Ayushman Bharat program.
Gautam would want to. Gautam, sorry, Gautam would want to come in here. Gautam would want to come in here because we would want to wrap this interview with this thought. The Nifty's hit fresh lifetime highs. 11,760.80. We did nudge that number. 65 points more, but we did nudge those lifetime high levels in the session today. So very interesting moves and. On a day like this, it has happened. Nudge that level and come back. Gautam, before we wrap up, since we've done that now, I just want to recap our conversation and your thoughts before we wrap up this interaction. You would reckon that while it's a good feeling to be at life highs for all the 3 benchmark indices, it does warrant caution.
Yes.
Okay, that's a unequivocal yes from Gautam Trivedi on that, and he remains bullish on mid caps, but selectively you should guard against the competition that is brewing up in some of the spaces that might otherwise appear to be very, very attractive. Good having you, Gautam Trivedi, today. Thanks so much for taking the time out and being with us. Look forward to having you more often.
Thank you.
All right, that's the view from Gautam Trivedi of Nepean Capital. The markets are doing very well for themselves.
I think 11,760.85 is what we touched.
Yeah, somewhere around those levels.
11,760.2 was the previous high. So marginal difference, but we just managed to nick it.
Yeah, well, and therefore it's a good time and a good day to get in a very special voice. On the other side of the break, Morgan Stanley's Rhythm Desai will spell out his investment strategy amidst the soaring market valuations, the sputtering economic growth, and the upcoming general elections in India. Stay tuned, you can't miss this.